What if a personal loan borrower suddenly dies? What happens then? Imagine, it's 2 in the night. The house is silent. Only the ticking of the clock can be heard. Suddenly the phone rings. The biggest support of the family, the main earning member, is no more. Tears, shock, grief. And slowly, in the middle of all this, another fear knocks at the door, the loan. The personal loan. Those EMIs that were deducted every month. Those monthly messages that used to say thank you for your payment and give relief. Now the very word loan creates panic. Only one question fills the mind. Who will repay this debt now? Will the bank raid the house? Will the family be forced to pay? Will the children's future be crushed under the burden of debt? This is the real truth, a reality very few people know. But everyone must understand. A personal loan often feels like a lifeline during sudden tough times. Someone's medical treatment, someone's wedding, someone's business, someone's dream. And sometimes just to hold life together, people take personal loans. They are quick to get, don't require collateral. And that's why people feel relieved. But does life always go according to plan? Sometimes it tests you without warning. And if, while a personal loan is ongoing and EMIs are still being paid, the borrower dies, what happens then? How does the system work? What does the bank do? What does the law say? And what are the rights, limits, and realities for the family? Today we'll understand this not like a story, but like a truth, calmly, humanly, and with the belief that information is the biggest strength. First, understand one thing. A personal loan is not taken by pledging a house, car, land, gold, or any property. It is an unsecured loan, meaning the bank gives money based on trust that the borrower will repay it. The borrower's income, job, credit history, and financial discipline, these are the things the bank relies on. This means that if the borrower dies, the bank does not have any direct weapon of seizure that allows it to suddenly storm into the house and say, "This house is ours, the belongings are ours, everything is ours." It does not work like that. The bank cannot seize the family's property, cannot take the house, cannot tow away the car if it is a personal loan. There are rules in the system, there is dignity, and above all, there is a very clear legal framework. But the story doesn't end here, because banks are not charities. A bank does not work on emotions. It works on systems. That's why the first question the bank asks is, does this loan have insurance? Many people casually say yes and take a loan, and along with it pay a small premium for loan protection insurance without realizing how powerful it actually is. This insurance is the very shield that can save a family from a financial tsunami after a tragedy. If the loan is protected, then after the borrower's death, the insurer pays the outstanding loan to the bank and the loan gets closed. The family does not bear any burden. That is why banks often say at the time of giving a loan, "Sir, madam, please take protection along with it." At that moment, many people think it's a useless expense. But in reality, it is not an expense, it is future security, an invisible safety cover that may never be needed. But if life suddenly turns upside down, it becomes the biggest support. But is every loan insured? No. And this is where the story becomes a bit serious. If there is no insurance, the bank looks at the co-applicant or guarantor. If two people have taken the loan together, then if one is no more, the other is legally responsible. They did not sign just to attach their name. They signed with the responsibility that even if the primary applicant is gone, the loan will still be repaid. The SAM applies to the guarantor. A guarantor does not mean supporting only in name. It means, if the borrower fails, I am ready. That is why you should never become a guarantor just because someone asked emotionally. That one signature is a very big legal commitment. Now comes the biggest question. What if the family is neither a co-applicant nor a guarantor? This is where many people get scared. They think, now the bank will come and say, pay the money or the house, shop, and property will be taken away. But take a deep breath and listen carefully. If the family did not sign the loan, did not become guarantor, is not a co-applicant, then legally they are not bound to repay the loan. Just a relationship does not create financial liability with the bank. Being a daughter, son, or wife is an emotional relationship, not a legal loan liability. But there is a small twist in this story. If the borrower has left behind any wealth after death, such as savings, property, gold, or funds, then the bank can claim its rightful amount from that, but only to the extent that is legally allowed. Suppose the loan was 5 lakhs. The borrower had no savings, no property, nothing of value left behind. In that case, the family has no legal pressure. But if the borrower left behind a 5 lakh loan and the family inherited property worth 3 lakhs, then the bank can legally claim only that 3 lakhs, not more than that. Meaning, the bank cannot bankrupt the family. Its right extends only up to the value of the asset. The equation of life here is very clear. The law maintains balance. The borrower's honor, the bank's rights, and the family's dignity and security. And think about this. If there is no insurance, no co-applicant, no guarantor, and the borrower has no assets, then what will the bank do? Many people assume there will be jail, defamation, news in the papers. But the truth is different. The banking world has its own rules. In such a situation, the bank writes off the loan. This is not a favor. This is the system. The bank moves it into its loss account. The loan is closed. No police comes to the house. The family is not dragged to court. A page in the ledger of life quietly closes. But here comes another human angle that many people ignore. The borrower is gone. The loan is written off. But what remains? The family's pain, memories, responsibilities, children's education, household expenses, and the biggest thing, fear. That is why if someone in your family has a running loan, if the main earning member is repaying a loan, never ignore 2 things: loan documents and insurance status. Tell your family that there is a loan, how much it is, how much EMI is, whether it is insured or not. Hiding these things does not increase love, it increases problems. If life suddenly stops cooperating, at least the system should stand with the family. That depends on our awareness. Now imagine a small story. A middle-class father who paid his EMI every month. He had loan protection insurance. One day he suddenly passed away. The family broke down emotionally, but the bank did not harass them. The insurance cleared the loan. The family did not bear any burden. The children continued their studies. The household continued smoothly. Now look at another picture. A family where the father took a loan, did not take insurance, and did not even inform the family. Suddenly he passed away. The bank contacted them, checked documents, assessed the financial situation, and found no assets. The bank wrote off the loan. The family had no legal burden. But if this family had been co-applicants or guarantors, the story would have been different today. That is why awareness is the biggest wealth. This is not just information, it is an emotional truth. Because a loan is not just about money, it is also about responsibility. When we take a loan, we connect ourselves to the system, to the law, and directly to our family's future. So always ask one question with every loan. What if something happens to me? This is not fear, it is responsibility. This is not negativity, it is maturity. And if you are standing beside a family that has gone through such a situation, do not panic. Inform the bank in writing about the death. Submit the death certificate. Check the loan documents. Check whether there is insurance. And if any bank staff emotionally pressures you saying, the loan must be repaid, remember, the law is on your side. Be respectful, but stay strong. Take legal advice if needed, but do not be afraid. Losing someone is already the biggest loss. On top of that, financial fear cannot destroy a family. as long as knowledge is on your side.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.